What's up everyone? Welcome back to the channel. In this video, I'm gonna go over my top 5 stocks for the month of May 2021. These are the best stocks to buy that I screened through based on news, fundamentals, and technicals that are all very different and specifically interesting to play right now for the month of May 2021. These are all fresh new plays that I'm going to buy in the coming week. Make sure to stick around and listen to my full analysis on each of these companies. I'll go over key numbers, recent news, and why I expect them to grow and make you some money. Let's not waste any time and jump into these stocks that I think have very high potential to outperform the market over the next month. Real quick, all I ask is this video took a lot of research, so if you smash the like button, it would mean a lot to me. The first stock on the list is Shopify, ticker symbol SHOP. This is a Cathie Wood stock, and she believes that Shopify can be as big of an online retailer as Amazon is someday. As a result, Cathie Wood saw the dip in Shopify stock as a buying opportunity, and she loaded up the bus. ARK Invest added to its existing stake in e-commerce platform last week. Cathie Wood said, "We're trying to figure out how Amazon is going to deal with this notion of individuals seeing something on Instagram or elsewhere on Facebook or on Twitter or on Snapchat and just buying there. And that is crucial because that's a Shopify-enabled commerce opportunity, and we think it's going to be big." I bought Snap on my ARKH portfolio on Patreon in the mid-40s, and I believe that Snap had great potential for competing with other advertising companies like Facebook. At $1,140 currently, I'm adding shares because that's a 21.5% discount. The most important advantage, and this is super important if you want to make money with this stock, is that Shopify's fulfillment network is the competitive advantage that could take this stock to $2,000. Because of Shopify's fulfillment network, or SFN, not only can Shopify host an e-commerce platform, but it can pack, ship, brand, and manage orders and inventory for clients. This places Shopify in an advantageous position over its peers that merely sell software as a service. Shopify's fourth quarter revenue jumped 94%, while 2020 revenue surged 86%. You should not expect Shopify stock to become cheap. Its competitive advantages, particularly with the benefit of SFN, will likely foster massive revenue, profit, and stock price increases in the coming years. The price-to-earnings ratio is high, and it didn't make sense to me for a long time, but now I understand that if Shop is even a quarter of Amazon, we have an opportunity here to 3x our money. Next stock on the list is Unity Software, ticker symbol U. A real-time 3D development platform, Unity Software is trading at a bargain basement price. This is an innovative stock, and of course, Cathie Wood owns it. She has been boosting her Unity Software stake over the last 2 months as the stock fell by 28% year to date. Despite the recent sell-off, the company's future fundamentals look strong based on the revenue growth projections. Unity Software expects 2021 revenue in the range of $950 million to $970 million, in line with the company's plan of sustaining 30% revenue growth in the long run. Unity CEO John R. said, "As a leader in creating and operating tools for the world of real-time 3D content, we continue to invest with the intent to capture what we believe is a substantial opportunity ahead in 2021 and years beyond." Unity is most known for providing the engine for modern video game development. Its namesake platform can produce games that run seamlessly from mobile to virtual reality and everything in between. To be honest, I think VR is going to take off in the future in many ways. I've got some reasons that I'm very bullish about, but let's just say that people need entertainment. In owning Unity, you're not exposed to just one Minecraft or Second Life sequel. Rather, you get access to mobile gaming, PC gaming, VR and AR, and even industrial applications such as online retail and architecture/design. On December 22nd, the stock closed at $172.29. If the subsequent quarters go well, I can see the stock coming back to its all-time highs. All right, the next stock we have on the list, and this is an interesting play, especially right now, is Netflix, ticker symbol NFLX. Now is the perfect time to buy Netflix. Shares of Netflix were hit hard after earnings. The stock slid nearly 8% Wednesday following the company's first quarter earnings report. While the company did miss analyst estimates when it came to its subscriber growth, it didn't miss too hard. The first thing we should clear up is it's totally normal for Netflix to miss its subscriber guidance from time to time. Unlike many other companies that bake conservatism into their guidance, Netflix outlook reflects management's most accurate estimate of how much subscribers could grow. Wall Street always gets upset at short-term issues or a perceived miss, but I believe it's a fantastic time for investors to get in. Further, investors should note volatility in Netflix's actual subscriber growth relative to its forecast should increase as the streaming TV company's user base grows. This is because a small shift in trends on a large base of members will result in a larger raw difference than it would on a smaller base of members. After years of negative free cash flow as content investments exceed revenue, the company is now generating positive cash flows. Free cash flow during Q1 alone was $692 million. While the company expects free cash flow to be closer to break even for the full year as it plans to spend $17 billion on content in 2021, management said in Netflix's first quarter update that it's very close to being sustainably free cash flow positive. Amazon wasn't clearing much cash for many years. Now Netflix, it's in a very similar position. This method of high growth is called blitzscaling in the tech world. Given Netflix's strong subscriber growth momentum on a year-over-year basis, its scalable business model, and an expectation for more membership price increases in the coming years, cash flow will likely grow substantially over the next 10 years. Year to date, the stock is actually down 3%. With a market cap of $223 billion, if the stock doubled, it would be just barely sitting in the top 10 of the S&P 500 from its current 25th position. That may be a stretch in 2021, however, my conservative price target would be $600 per share. Next stock I have on my list is SKLZ, ticker symbol SKLZ, and again, this is my high growth list, so I'm picking stocks in the technology space that can grow quickly. SKLZ is an online mobile multiplayer competition platform that is integrated into a number of iOS and Android games. Players use it to compete in competitions against other players across the world. The company is currently worth $7 billion. Kathy has been loading up on this stock in the ARKW ETF. SKLZ stock, however, lost more than half its value since peaking at $46 per share in February, but Wood has been buying shares for her ETF all along. Her funds added over 5 million shares, with ARK Innovation buying over 4 million and ARK Next Generation Internet picking up 1.2 million. Esports is one of the fastest growing niches, and the potential for betting on competitive play has many believing that this could be a home run pick. I bet you didn't know this, but esports has a bigger audience than the NBA. Total esports viewership is expected to grow at a 9% compounded annual growth rate between 2019 and 2023, up from 454 million in 2019 to 646 million in 2023. That's exactly right. The demand, or better yet, I should say, the audience is larger than the entire US population. Mobile esports has spiked in countries like Southeast Asia, India, and Brazil in 2020, expanding its market dramatically. The CEO said, "Our vision is to build a 100-year company." The management is exceptional and very conservative. The guidance reported by SKLZ for Q1 of 2021 shows a growth of 84% year over year and 18% quarter over quarter. This guidance does not take into account any revenue from potential new games, which can provide massive upside during future earnings reports. They are also taking the necessary steps by expanding outside the US, which has me very excited. SKLZ is on track to launch in India later this year. Management believes the expansion will increase its addressable market by 65%. At the moment, international revenue is less than 10% of SKLZ revenue. Overall, I see the stock having potential to go back up to $40 highs in the coming quarters. Last stock is C Limited, ticker symbol SE. C Limited has their hands in esports, mobile gaming, e-commerce, digital payments, and food delivery services. I believe C stock will continue to beat the market. The stock is currently headed back to its highs and showing a lot of strength. The market cap is over 130 billion, so this large cap stock has size and growth to it. Founder CEO Forrest Li and his team have created multiple business segments that integrate with one another. C Limited is focused on capturing lead positions in Southeast Asia and Latin America for mobile gaming, esports, e-commerce, digital payments, and banking, food delivery services, and artificial intelligence. As I mentioned before, I'm very bullish specifically on esports, but I also like the other areas this company is invested in, such as digital payments and specifically artificial intelligence, AI. I think that's going to be an exploding area in the coming few years. These segments have generated triple revenue growth for C Limited. As a result, its consolidated revenue grew more than 100% in 2020, and it's expected to extend that momentum into 2021. Typically, anything above 30% is a high growth stock, but C blows past those typical high growth stocks, and it actually delivers insane results. Bookings for Q4 grew to $1.03 billion, up 111% year over year. The number of quarterly users grew 72% year over year to 610 million, while quarterly paying users grew 120% in the same period to 73 million. C Limited is an internet company that reminds me a lot of Amazon in the way it's relentlessly pursuing new businesses and market. This is a disruptive innovator, and no surprise, Kathy Wood also owns this stock. Year to date, this stock is up over 30%, and I believe it's easily a $300 stock. I want to know in the comment section below, what stocks do you guys think are going to do well? Let me know in the comment section below if you already have some of these stocks or if you like other stocks that are similar in the same space. Also, check out my option playlist right here. I have a free video on how I use options to beat the market, and the first 5 are a must watch. Thank you for watching, and I'll see you guys in the next one.